Left, yeah, there you go, that's good.
Okay, so looking at me, I'm recording.
Yeah, okay.
Okay.
In 3, 2, 1.
What's really interesting is that the opportunities we're seeing today are very different from the opportunities 20 years ago.
The circumstances are extremely fertile for growth.
The numbers, the demographics, the size and scale of the opportunity, it's very difficult to see a similar opportunity almost anywhere else.
We think that the inflection point is now.
The events of the last 18 months have helped to accelerate the needs of consumers and the ability of businesses to deliver utilizing technology, utilizing lots of different platforms, whether it's in e-commerce, whether it's in digital banking, whether it's in clean energy. So companies that were positioned well for the future have found their business models have gone forward in 2 years what they expected to happen in 5 to 10 years. What it is about is companies reacting to the needs of consumers, companies that do not have sunk capital in legacy business models, companies that are able to utilize technology, innovation to leapfrog traditional business models to deliver what consumers want. What's fascinating about what's happening right now is the change is not concentrated in the traditional areas like technology. It's happening in a whole range of areas.
Today, one of the biggest themes that we're seeing out here in Asia is the mobility and the electrification of the transportation sector. You've got the technology leadership. The producers here have been making these batteries for other applications for a good part of the last 2 decades. Asia is also the home to the leading battery producers. It has an extensive supply chain going from battery components, raw materials, intermediates, all the way through. We expect these Asian companies to maintain their leadership and push forth the global penetration of electric vehicles. The battery capacity that's sorry, what was that? Sorry, we're having battery problems.
The Asian Pacific region harbors the world's second largest pharmaceutical market, China, which has a drug sales of $230 billion by 2020. And it will register a growth of 5 to 6% for the next few years. Chinese biotech is no longer a pure fast follower. Actually, they're striving to be on par with their global peers.
One key area that we are excited about is retail. We see online retail as a big opportunity for retailers in Latin America and specifically in Brazil, which is the biggest market. Yeah, sorry about that.
That's all right, no worries.
You put together this young, digital-savvy population with the fact that their needs are not being met. And I think what this means is there's a lot of opportunity for new players to come in and innovate.
The scale, again, is very different from what we've seen in other parts of the world. If you look at Southeast Asia, it's a population of 600 million people. If you look at India, just the population under 35 is about 800 million people. These are digital natives that are finding opportunities to access technology, opportunities to access financial services, opportunities to access aspirational products like education and luxury goods in a way that we've never seen before.
Battery capacity today is about 0.2 terawatt hours, and we're expecting that to grow to 7 terawatt hours by 2030. That would involve almost $500 billion of investment.
In terms of penetration rate, the biologics drugs in China only accounts for less than 20%, whereas in developed countries in US, the penetration rate is around 44%.
The penetration of online retail in Brazil is 10%. That's half of what the penetration is in the US and a third of what the penetration is in China and the UK.
You can see the very rapid growth of internet users in the region and how quickly that's changed. In 2015, we had 250 million people using the internet. This has grown to over 400 million by the end of 2020.
When we look back at this period, I think what we're going to see is actually a phase. Because of what happened with the pandemic, it's catalyzed change, it's catalyzed innovation, a greater focus on technology and the scalability of that technology opportunity in a way that means we're going to see a lot more growth, and this growth is going to happen faster and sooner, and these opportunities are happening today on the ground in places like Asia and Latin America.
Demand for electric vehicles is growing at a 25% compound annual growth rates over the next 5 years. We're actually seeing batteries grow in excess of that, more like 35%, 40% over that period.
In China, the biotech industry is about $60 billion by the end of 2020. According to our projection, this market will be more than doubled to reach $128 billion by year 2025.
The companies here have the advantage of looking outside, mainly into the developed markets, and seeing what has worked there, so they can kind of leapfrog to the winning solutions that were adopted in those markets.
We think that the fintech opportunity is attractive because, firstly, we're seeing very rapid growth from a low base. We think that digital transactions will more than double by 2025. We think that digitally facilitated loans will more than quadruple.
Give me 5 reasons why.
Is that okay? Fantastic. Yay!
We at Franklin Templeton have been looking at emerging markets for over 30 years. I think it's a very interesting time to be looking at the emerging world today. The breadth of opportunity, the growth that we're seeing, the innovation, the sustainability of the business models, the much stronger institutional resilience. When you put that all together, I think the future is looking very, very attractive for emerging markets.